Some regulators for certain sized institutions actually require a fourth line of defense, which would be those external auditors that report again directly up to executive management, and your regulators would be considered that fourth line of defense.
Good morning, Rayleen. How are you?
Good morning, Patty. I'm well. How are you?
I'm doing awesome. Thank you for taking some time to talk to me today. Can you introduce yourself and share how you became an expert in risk management and fraud investigation? Give us a little bit of background.
Sure. I don't know, experts. Some days fraudsters like to try to keep us on our toes. So my name's Rayleen Pirnie. I actually started as a fraud investigator 27 years ago in a small community bank. And from there, started to realize there was a lot I did not know. So I started to explore how compliance and risk management, controlling risks, how we could do things better, which all funneled down into how I could be a more effective fraud investigator. So it was really a life journey that I'm still on, still learn something new every day. And hopefully I can share some things that might make your life a little easier.
So my first question is, I hear this a lot, and I think when I was studying the APRP, you'd see this a lot. Enterprise risk management. Can you tell our folks what exactly is that?
So, enterprise risk management is taking a slightly different approach to managing risk. One problem we had in the industry for a very long time was almost this siloed effect. I own this product, therefore, I know what's best to handle the risks associated with it, and everybody else steer clear of my lane. I've got this. And obviously, when you have those silos internally, a lot can get missed, especially if you have, audits, examiners coming in, and you want to make sure that you're taking a look across your entire organization, not focused solely on one area. So enterprise risk management's really just like it sounds. It's taking that more holistic approach and seeing how risk can affect multiple departments in different ways, and
Mhm.
then finding the controls that are appropriate to manage that risk on a broader scale.
Hmm. So this segment really is talking about lines of defense. So what does that mean, and how does it support enterprise risk management?
Sure, lines of defense. So if your institution hasn't already heard of this, you're going to. All of the regulators now recognize the need for some implementation of some degree on lines of defense. What that means is, again, it's really kind of like it sounds. You have a product or you have a solution, let's say online banking. And multiple people could be stakeholders in online banking. However, there's naturally going to be some that are a little more keyed into the day to day operations of that product. So that's probably going to be your frontline people, the ones who are working within it, working with the account holder base. Your second line of defense is a little bit removed from that. So they're not working the day to day boots on the ground operations. Second line's going to be like finance and legal, compliance. They're they're really there to make sure the first line knows what they're doing and that they're catching those controls. So if the first line misses something, now we've got a safety net, right? We've got that second line. Then there's the third line of defense, which is that upper crust, internal auditors reporting directly to the board and making sure that everything is followed in line with policies, procedures, risk appetite of the institution. And some institutions have realized, there might be a fourth line necessary. Some regulators for certain sized institutions actually require a fourth line of defense, which would be those external auditors that report again directly up to executive management, and your regulators would be considered that fourth line of defense.
So how does an institution know if they should be using three or four? Does it depend on the size of the institution or their appetite, the risk for appetite? How would they know?
All of the above. And quite frankly, your regulator's probably going to tell you which one you need to be
Okay.
using. So it's probably going to be a really easy assessment, not one you really have to figure out. But it is largely dependent on what you just said, Patty: size, complexity, the amount of risk that you have with the different products and services. So, for example, that small community bank I started with, the risk profiles of that institution were very different than the national bank I ultimately went to. So, Size, complexity, how effective are your lines of defense, and how robust is your enterprise risk management? Those could all fall into, how many lines of defense you're going to need.
So how would I know if I was a bank or a credit union if my lines of defense aren't what my board is expecting, or maybe too rigid, or too like maybe I'm doing too much for the size of my institution or the risk that I'm taking on? How would we know?
One of the biggest benefits of utilizing lines of defense effectively is you're communicating across those lines, right? So your first line of defense is having constant communication with the second line. We've identified this as a potential risk, or, oh, we missed that one. You caught it before we did. How do we fix that? That also gets set up into the third line. And trust me, if your board's not feeling that you are operating within their risk appetite, that's going to flow back downhill to you at the first line of defense. So I like what you said there, though, Patty. And I think that is another thing that sometimes institutions struggle with. They develop this very strict program. Here is our 682-page document detailing our lines of defense. And this is what we do every time. That doesn't work either. If you create it where it's so rigid and it's not responsive to the regulatory environment, the fraud environment, the risk appetite of your institution, you could then find that it's just not keyed in correct as well. So it's a moving target sometimes. Break down those silos, have that great communication, but understand it's not going to be, necessarily a program written out that you're following the same way every time. Have those internal conversations and remain flexible.
So I have one comment, and then I have another question. Speaking of silos, you brought that up. I was thinking about that. So generally, my first comment question is, generally your board or a subsection of the board would say, "Yep, this is perfect," or "No, we want you to do this," right? We want you to embellish it, right? That would come from that. Would you agree?
I agree to a degree. I think it depends on how savvy your board or the committee in lieu of really is about the type of risk. So for me, the way I look at enterprise risk management and developing effective lines of defense is taking that guidance from your board,
Hmm.
working with senior management to define here's where our inherent risks are. Here's where we started, here's where we're at now. Does this align? Executive management's responsible for ensuring that the board objectives are met and that all staff within the institution are doing what they can to control those risks. So I agree. I think it's different for every institution,
Yeah.
again, depending on the type of risk you have and how involved and knowledgeable your board is about that level of risk.
Right, right. So to get back to the silos, what kind of tools or techniques can do you think are effective in helping institutions break down those silos? Are there?
Yeah. So again, I think that you're going to hear me say this a lot, and I'm so sorry in advance, but depending on your complexity, your size, that small community bank I was with, I was able to walk down the hallway to get to the risk manager, and then across the hallway was HR, and we were all right there in one building. Go to the national bank, and all of a sudden, oh gosh, they're in other states. So there are tools out there. Would encourage that you kind of evaluate what your needs are. Do that needs assessment. Is the need that we need a way to track what we've done and ensure that all of our controls are effectively mitigating risk? That might be a case management system. So something that multiple parties, no matter where you're at, have certain levels of access to be able to add data to, documents, et cetera. Or is it that you need help breaking down some of those silos and increase the communication or the visibility of executive management into the day-to-day processes? That could look like a very different product. But what I will say is that yes, there are some very robust customizable products out there that you can research and utilize.
So I guess the last question I have in this segment today, really, what are the benefits for a bank or a credit union? What benefits are they going to see when they've effectively implemented these lines of defenses, whether they're three or four? What are the benefits? I'm assuming mitigating risk, obviously, but
Yeah, well, if you've done it correctly, yeah, you should see a pretty significant reduction, particularly in product and service level risk. As far as the immediate results that you'll see or some of the benefits that you'll see, trust in the marketplace. If you're effectively managing risks, your stakeholders, your account holders, there's an increased level of trust there. So there's going to be fewer issues, fewer potential problems of cease and desist orders from regulators. Then you don't want them telling you that you're not doing something correctly. Obviously, that becomes public knowledge. You could also realize, maybe not immediately so, but longevity wise, look at our changing compliance environment. Look how we almost on a monthly basis are sharing information about different regulations and laws changing. Effective risk management isn't just about controlling the risk you have today, it's
Mhm.
about future looking and identifying what's potentially coming your way so that you can effectively manage that as well. So, your operational resilience, your effectiveness, all of that increases when you're no longer concerned about the big bad wolf in the room, i.e., the risk.
Thank you so much. Thank you. That's interesting. I've learned a lot actually. I thought I knew everything, but I didn't. Thank you for answering those questions.